Interest rates are always changing, and for buyers, sellers, and homeowners, it can feel impossible to keep up. Where are rates today? What really determines them? And are we ever going back to those ultra low COVID era rates? Today, I'm sitting down with Joanne Johansson, CEO of Platinum Mortgage Solutions, to break it all down. We'll talk about what drives mortgage rates, how to navigate the current market, and why today's rates might not be as bad as they seem. If you're thinking about buying, refinancing, or just want to stay informed, this episode is for you. Let's get into it. And with the rates being where they are and fluctuating here and there, what is the rate as of today? What are we looking at today?
So what a lot of consumers don't know is that there are about 6 to 8 different factors that actually go into an interest rate, right? So to just say what's the going rate today, I can tell you today as of January 16th.
Yeah.
Rates are looking good.
Yeah.
Some of the reports that came out, some of the financial reports, things that drive the rates are the CPI numbers, the jobs report, a multitude of things. I'm not going to go into all the crazy things.
Yeah.
Your interest rate is derived from what type of house you buy, right? Single family home, condo, multifamily home, how much money you're putting down, what your credit score is, right? Those are all factors in what your interest rate is going to be. So, right now today we're in the mid to upper sixes, okay? Which we've been in for probably about at least the last year, and as hokey as it might sound, there are some lenders that I work with because of the volume that we do that will give us pricing specials, right? So we do work with lenders that I deal with, all they do is mortgages, right?
Okay.
So that's important to know that we're wholesale, banks are retail. That's another huge difference.
That's huge.
That's huge. Everybody knows the difference between retail and wholesale. It has to do with the price. Pricing meaning interest rate. So I hope that clarifies. I'm not trying to skirt the issue of what's the rate, but there's factors.
Mortgage brokers are better, and I like that. And the rate, the rate is actually better than when I bought my first home years ago. And crazy enough, I had a adjustable rate at like almost 8%. And when I hear the buyers complaining, because of course during the whole COVID and after, we were at like 3%, and we're not going to see that, I would expect. I think that 6% is doable, and that's.
I think a nice balanced market is 4.5 to 5.5. I think that makes for a nice balanced market. I'm not really going to speak to the 2 and the 3% interest rate. When we hear industry experts talk about that, their explanation to that is the punch bowl went unattended way too long, right? It was not good for our economy. It was good for a lot of people, right? It was good for a lot of people that got those rates, or that received those rates, whether they refinanced or bought. But it didn't help our economy. And it certainly didn't help our housing market, because now people don't want to, some people don't want to move on. But there's a lot of life circumstances, new babies, divorce, marriage, having to move in parents, having to move out your kids. There's a lot of different circumstances that bring people to want to sell or to buy.